Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we're at the final trading day of July and also the end of the first month of the new quarter. As I've been discussing over the last 6 to 8 weeks, all of the metrics that we see coming out of the economy, including a lot of the earnings reports, are coming in much better than expected. It's not a surprise that these metrics are coming in better than expected. It was very hard to estimate how bad things really were when we shut the economy down. Those better than expected metrics helped build market sentiment to where it is today, as we saw the high of the recovery printed in the month of July. But it's going to be even more interesting going forward as we go into August and September, as what if the numbers that we start to see from July and walking forward through August and September aren't as good as they are expected to be? What if things start to miss the marks, and what happens during that time? I've been discussing over the last week or so that I believe the markets are going to enter in a very choppy zone for the rest of the summer, most likely into at least early September. So in the next 4-6 weeks plus, we're going to see a very choppy zone. The earnings that came out after Thursday's close on the big tech stocks came in better than expected, and most of these stocks are printing up decent numbers overnight. But I will show you in the technical section that they're not going anywhere. They are locked into the same range as the NASDAQ is. While it feels really good, it's not as good as it feels. A lot of times when we see these earnings reports come out like they did after the close today, it really feels like things are about to take off again. They're not. They're definitely stalling here, even though we're going to see some upside in the morning. Overnight, what we've seen happen is the enthusiasm that started off several hours ago continues to fade as the evening goes on. The events around these earnings reports are not triggering the markets back into some resurgence to the upside. Contrary, it's confirming the patterns that I've been talking about. In the technical section, I'm going to do a very brief overview of the FANG stocks, and you'll be able to see that all of these patterns are in the exact same configuration. But looking at yesterday's activity, we saw a lot of weakness early in the morning. The S&P was down about 1.7%. It rebounded to close only down 0.4%, and that was short covering ahead of these earnings reports I was just discussing. Overall, we're just seeing this market churn. There's not a lot of leadership anywhere we look right now, as all of the patterns that I'm looking at, especially on the leading stocks, have all been in a climactic pattern, setting up a high-level consolidation. Now, sometimes these high-level consolidations will end up to be a top. We don't know that yet, but for sure we're going to be in a very choppy zone. This will go across the spectrum of events, with the exception as the U.S. dollar continues to sink, and I'll discuss that in the technical section tonight. On Friday, we will have some economic releases to come out, nothing material. I still expect to see the markets just kind of meander around. I don't believe that we're going to be able to get over this 3280 resistance level that we printed last week. My expectation is the continuation of a sideways pattern, and there's not going to be a lot of excitement in these markets. The only market that's really trending in a direction right now is the U.S. dollar, and that's going down. We are seeing also pressure on the U.S. Treasuries pushing down into lower end of the yield spectrum. My expectations are that we could see the markets close lower today, but it's likely to be a very choppy session, and I would pay very close attention to the market grid. Let's take a look at the charts and see what they're telling us for the end of the week and moving into next. Beginning with the WaveTech database, one of the events that I have been talking about for the past several sessions is the beginning of the rollover or the liquidation of the short-term models. They were up to 87% bullish. We're finally starting to see some selling. In tonight's run, there was nearly 800 sell signals. Both 1.2 and 3.2 have a negative sentiment for the rollover. And what that means is there's more sells than buys as it's starting to signal this liquidation. This is exactly what I've been waiting to happen. Over the next week or so, we're going to continue to see this liquidation happen. My hope is that we get down into the 40 percentile range, which will help us to reset the database, and then there's going to be a consolidation. Going to my opening comments tonight is that my expectation is that we're going to be in this consolidation for at least 4, as many as 8 weeks. And this database is telling us that that rollover is going to happen. So far, it's only moved to 83.38% bullish, but it will continue to liquidate. And once it gets below 65%, it should accelerate from there. Going over to the intermediate database, it is at 65.38% bullish. We may see some selling depending on how the close comes in today. As you recall, all of the weekly trades come out on Monday. On the short-term daily models, they will issue buys and sells for every day as we go through the spectrum, especially since we cover 16,500 stocks. This intermediate database is likely to stay very stable as we go forward as the markets enter into this consolidation phase that I've been discussing. The first chart we're going to look at is the NASDAQ futures, and you can see we are moving up overnight. We're moving back up toward that 11,000 print that we had last week, but we're likely to see some fading. The NASDAQ has faded quite a bit after the earlier market reaction in the evening to the reports from the FANGs. But the important part to understand here is looking at the market grid that we're going to stay within this range. And on Sunday night, when this is updated, we're likely to see some further downside projection, not a lot, where the grid moves notches down just a little bit. Let's take a look at the FANGs. Let's start with Apple. Same pattern you'll see. You almost can't tell whether it's the NASDAQ chart or whether it's Apple. Same pattern up here. It is consolidating. The PPMs look almost identical. We'll look at Google or Alphabet. Same pattern, same configuration on these. These are not breakout patterns, by the way. Let's look at Facebook's is a lot weaker. We're seeing the PPMs are rolling over. On PPM 1, it's really losing a lot of momentum, but the same configuration, we're actually hovering. Facebook is the weakest of everybody in this group. You can see PPM 1 is just collapsing right now and has actually turned negative. Same squared off pattern. Only difference on this one is Netflix began its correctional phase earlier than the others did. And the final stock is Amazon. Same basic configuration. We're seeing this pattern set up where we're going to go sideways. The point of it is that the NASDAQ's not going to move a lot higher from an index standpoint if these stocks aren't going to be able to print new highs as well. We're going to see this consolidation set up. Beginning with the NASDAQ futures, looking at the market grid, you can see the R2 is 931. We actually printed 10,939 so far tonight. The low has been 10,843. S1 is at 10,728. We'll likely see that number tomorrow. If we get above the resistance 2, then 11,004 and 11,069 are the magic numbers there. Now, last week we printed 11,058. We could challenge that high, but it does look like even if it were to challenge it, this top end of the grid for today is going to be an extreme. R3, RXT, which is 11,004, 11,069. So we may have actually seen the high printed tonight at 10,931. Likely to see an R2 S1. And if we get through S1, then we'll expand down to the downside. If we did see it get through S1 at 728, then the next target would be 10,656 S2. We do have the 10-day moving average at 10,716, and that's likely to be a major support zone as PPM1 is at a 0.23, telling us there's only a 40% probability to trade below that level. So it definitely looks like an S1 R2 session for the NASDAQ. Going to the S&P futures, we've seen the same type of range so far overnight. R2 is 32.76. The high so far has been 32.73. S1 32.35. The low has been 45. We're likely to see this thing print down toward S1. The configuration looks like we're going to be in a choppy sideways range. S1, R2. If we do expand, we're going to expand on the downside. I want you to pay attention to the PPMs and notice that they are not responding to the higher prints on this market. Now, we're only showing the futures up 250 points, but after the cash close, they rallied 10 handles, so we're actually up about 12 handles. All that does is basically erase the decline that we had yesterday. I mentioned in the opening commentary, I don't believe that the market has the type of momentum to get through that 3280 level. In last night's video, I talked about the market grid of R2 on a monthly basis. This will be the final session that this grid will be valid. There'll be a new grid for monthly, weekly, and daily on Monday. Complete different spectrum set up for the month of August. R2 this month was 3279.77. The actual high so far has been 3279.99. There are some positives from a momentum standpoint. The PPMs are trying to break out. This reflects what I'm seeing in our intermediate database as we've gotten traction up to about 65% bullish on an intermediate level. So this is just confirming that the trends are firm, that the intermediate and the longer term trends are suggesting this sideways pattern for August. The next market that I will cover tonight is the US dollar. This is the monthly chart. We're just plummeting right now. In the month of June, we got a sell signal at 97.79, currently trading 92.60, down about another 0.5% overnight. And this market is definitely accelerating now to the downside, are moving sharply lower. We're seeing PPM 1, 2, and 3 accelerating to the downside with only PPM 1 so far in a trend mode. And I talked about this as well as we look at the weekly graph around this 200-week moving average. So we're penetrating it substantially, and there are actually no Fibonacci downside objectives at the moment. I will work more on this over the weekend to try to get a handle on what's going on with the dollar, but it's definitely showing a lot of weakness, and whether this is the debasement that a lot of folks are talking about or not is yet to be seen. I discussed this the other night. We have a short signal at 99.77 on a weekly basis. This was done on 5/29, got a sell signal. And if we go over to the daily chart, that the daily is short. There were a couple in and outs, but the last daily sell signal was at 96.03. It continues to be short. It's not anywhere close to seeing a bottom yet in this market. I will come up with some objectives on Sunday night when I do the first video for August. The final market tonight is gold. And gold has got a lot of acceleration. We're at 0.83 on PPM 1, PPM 2, 0.46, PPM 3, 0.39. In spite of the strength we're seeing, we're actually trading above yesterday's high. As we're surging up tonight, we're getting very close to printing above the 2,000 high that we saw on the December contract on the 28th. So we're definitely pushing higher. There's a lot of acceleration here. We'll stay in the range of the market grid. We're trading right at R2. R3 is 2005. RTX is 2016. That's for today's price. We could see a continuation from there. We're definitely going to be locking into a bigger range on the weekly, and it's possible that we're going to close above the RXT number on a weekly, which has the same implications as it does on the dailies. The rule on the market grid, if we close above the RXT number, there's 2 to 3 bars that will go sideways to down, and they typically will move back toward the lower end of the range. In this case, it's a weekly chart, so we're looking at 2 to 3 weeks. All of these markets appear to want to go into a consolidation phase. If the dollar continues to collapse, this could continue to push this market higher. There's a lot of momentum behind this market. On a weekly basis, the momentum is huge. We've got PPM 1 at 1.27, PPM 2 at 0.79, and PPM 3 at 0.66. While there's a ton of momentum here, there's still a high probability if we close above this grid that we will see a flattening out of the pattern. Just want to thank everybody for watching the channel and subscribing. We've got a lot of things that we're working on behind the scenes right now that we're going to be rolling out, making this channel even more exciting. Thank you again for being part of this. Have a great weekend. We'll talk to you on Sunday night.